Let's start with stock market overview. Now, it all began with company who decided to go public to raise capital. So once they go public, they are able to sell the company share to us, and we are able to buy and sell the company share of the company through a brokerage account. Now, if you look at the flow chart, it's pretty much sum up the whole process, where the company lists on stock exchange, and then they enable us to buy and sell the share of the company through a brokerage account. And for us, we just need to open the brokerage account, and then we can already buy and sell the share of the company through the brokerage account. Now remember, a business is a money-making machine. So the reason why we buy and sell the share of the company, or rather we buy the share of the company, is because we believe that the company in the long run will generate enough profit so that we can be part of the profit sharing community. Not all companies like to list their company on the stock market because of they have to be transparent on their financial statement. Not every company like to show their financial statement to the public, and that's why some company decided to remain as a private company so that they don't have to declare their financial statement to everyone. And also, in order to go public, it's a very tedious process, and a lot of requirement need to be met before they are finally able to list the company on the stock market exchange. Sometimes you hear that people call it stock, and sometimes you hear that people call share. To us, it actually means the same thing. But for learning purposes, to be precise, stock usually refer to the company, and share usually refer to the unit that you're holding of the company stock. For example, I own 10 shares of Apple stock. For stock exchange, basically it's a stock market exchange. So stock market exchange is a marketplace such as NYSE, New York Stock Exchange, NASDAQ, and also American Stock Exchange. Now, imagine this as a food court. Food court is a place where all the stalls are able to sell their food in the same compound, same community, but there are many food court around, different shopping mall, different location. Okay, so that's the same idea about stock exchange and the marketplace. Okay, this is a photo of the New York Stock Exchange. Inside this, how it looks like. Stock market is represented by a group of company used to measure the performance of the overall market, or more commonly known as index to us. So we have three major index in the US market. Yeah, by the way, I'll be talking mainly about the US market. All right. And one of it, the most popular one, is the S&P 500. We also have the NASDAQ, which mainly is tech stock. I say mainly because you will find some non-tech stocks still listed on the NASDAQ, but generally it consists more of a tech stock. And also we have the oldest index for the US stock market, which is the Dow Jones Industrial Average. Now the Dow Jones consists of 30 companies to form a group to measure the performance of this index. Whereas S&P 500, the name has said it, you have 500 top company. Performance is used to measure this index. I'm not too sure about the NASDAQ though. So anyway, it doesn't really matter to me as long as I know Nasdaq is used to generally measure the performance of tech stock overall. This is just a screenshot for the Apple stock apps. Like this is the index, S&P 500. By the way, all these are ticker symbol. Ticker symbol means you just key in a shortcut of a stock or a ETF and you are able to search the stock itself. Now, for S&P 500 index, you have SPX. This is the Nasdaq Composite Index, and we have Dow Jones. And for the ETF that used to keep track on those indexes will be SPY, SPY, QQQ, and DIA. Of course, there's a few more different ETF to keep track all this, but these are the more popular one. And I'll go through later on what is ETF, so don't worry about it. For now, just take it as these are the ticker symbol for us to search the stock or the ETF that enable us to see how much they are selling for now. Okay. Up next, we go to market capitalization. Now, market cap used to describe how, or rather used to measure how big is the company. And number of share outstanding is how the number of share that the company offers to the public. And these are the number of share that people are able to buy and sell in the stock market. Okay, and this is the formula how to calculate market cap. It has price per share, which is how much the current price, and the total share outstanding is, you can easily find it online like Yahoo Finance, or you just key in maybe Apple share outstanding, you'll be able to get the amount. So in order to get the market cap is you just need to multiply price per share with total number of share outstanding. Of course, you don't have to know the technical how to calculate all these things. But the main reason I highlight about market capitalization is because we'll be only focusing about mega cap stock and also large cap stock, because these two cap consist of the best company that you are able to invest in with a peace of mind. Okay, and here are the different category of market cap. Now for mega cap, it used to value the company which is more than 200 billion. And for market value between 10 billion and 200 billion is known as large cap. And you have mid cap, small cap, and also micro cap. Okay, so usually these two will consist of the best stock in the market that likely you have heard of. Like mega cap, you have Apple, you have Microsoft, you have Google, you have Meta, previously known as Facebook, you also have Visa and also MasterCard. Now large cap also, we have Nike, we have Disney, we have American Exchange, and also of course many more. Okay, these are just example to show you which are the mega cap and the large cap. Okay, now let's go a little bit on the stock market history. Now this is a chart of the stock market, US stock market in particular, since 1928. Okay, now since 1928, you'll see the market gone up, and then you have the Great Depression. The market crashed, I think about 80-90%, and then it start to go up again, go down, go up, go down. Now this also tells you that the market don't really go up in one straight line. Okay, it's never this smooth. Along the way, you have a lot of bad news. You have Vietnam War, World War II, stagflation. During this period of time, the market basically stay flat. So if you have invested, basically you won't really see much of a return. You have Black Monday, and you have the housing financial crisis, subprime mortgage. You have this tech stock bubble, and of course 2020 you have the recent COVID crisis, and along the way you have many small little crises. Okay, so what this essentially mean is, only for US stock market, if you hold enough for the long term, it will always go up in value. Okay, but in the short term, you'll see many up and down, because the market always goes in a uptrend, downtrend, uptrend, downtrend in a wave pattern. Okay, of course, sometimes the downtrend can be a bit longer before it start moving up. But the idea is, as long as you hold long enough onto the index, in the long run, you will always make money. All right. Again, the market history, you can see that from I think also about 1920 something, for 44 months, the market has up total about 190%. And during the Great Depression, market dropped about 83.4% in just 34 months. Okay, so all this gain during this period of time, it will just drop below it. But during the next bull cycle, market up 800%, and in between is just a 6 month of bear market, which dropped 20%, and you have up another 181 month for total of 900%. And all these blue are actually how much and how long the market go up, whereas all the red shows how long and how much the market go down. So this is a good overall representation of, in the long run, market will always go up most of the time and only go down only for a short period of time, and the losses, or rather and the dip percentage, or the bear market percentage, incomparable to the long-term one, you will always be able to make more in the long run. Okay, even after you factor in all the drop in the short term. This is another source from this S&P, for this S&P 500, from this S&P Dow Jones indices. Okay, these are all the bull market start date and end date. Okay, we also have this bear market for S&P 500, all the start date and end date. During all this bull and bear market, you are able to see that, on average, we are up for almost 59.6 months with a gain of 177.8%, and only the bear market will only last about 18.6 months, which an average drop about 38.3%. So also shows that in the long run, you have more bull market and higher gain as compared to the bear market, where you have a shorter period of time and also lower losses.